and staying safe. We're going to continue our weekly discussion here. Today's video is really focused on inflation, and with Canadian Thanksgiving around the corner here on October the 10th, grocery prices are definitely a hot topic. We're definitely see the food banks in a rise in terms of what Canadians can afford, and I'm sure you're looking at your budget, looking to spend time with family and friends, and really trying to figure out what should I make and what should my budget be. So I'm definitely going to take you through what it means from grocery, inflation, and how this all ties into interest rates and housing. Because at the end of the day, as I've shared with you multiple times, interest rates go up, house prices technically should go down. And as you can see here on this page, I'll take you through some data here for US, because US home sales could plunge 20% as well by next summer as a housing recession kicks in. And this obviously from economists. Economists have definitely a lot to say these days, given where we are with interest rates. So I'm going to kick it off here without a further ado. Just before I begin, guys, I am a wealth management advisor. I do this day in, day out. So, if you're looking for trusted advice, I always say reach out to someone. This is my perspective and obviously the perspective of the articles that we're going to go through here today. So guys, let's kick it off. Grocery prices in Canada continue meteoric ascent, rising at the fastest pace since 1981. As you know, inflation is at the highest in 40 years, and that takes us back to the 70s and the 80s. And food inflation is now what is carrying that inflation print on a monthly basis. And I'm sure you're feeling this. I definitely see in the grocery stores, and I'd love to hear your thoughts in the comments below. Tell me what you've experienced at the grocery store. I'd love to hear from you. So food inflation remains stubbornly high in Canada as grocery prices climbed at the fastest pace in more than 4 decades. While the overall inflation, as mentioned, has moderated in August, the cost of food purchased from stores was up a staggering 10.8%, and that's compared to the year before. Higher prices swept nearly every aisle of the grocery store. Even items once considered cheap substitutes for pricier items weren't immune to inflation. So if you're looking for those, save brands, no-name brands, those are going up in price too. So this is not just particular items. It's across the board. So for example, frozen and dried vegetables, usually considered a budget-friendly option, jumped 14.1% last month compared to the year before, while fresh vegetables rose a more modest 9.3%. A few months ago, beef and pork prices were increasing significantly, and you could substitute for chicken. Flour prices are up 23.5% in August compared to the same month last year. Pasta prices up 20%, bread up 17.6%, eggs up 11%, fresh food up 13.2%, and fats and oils up 27%. And as you can see, I'll definitely have these articles in the description below. You can read at your own pleasure, but you can see every grocery product has gone up in price, and you can expect this to continue based on what potentially could happen with gas prices if they continue to go up as well. And obviously, it's expected that food prices will continue to increase. Hopefully, the inflation comes down based on, Bank of Canada continue to raise interest rates. With their next decision point, guys, this month in October 26th is when they make their next announcement. My next video will definitely be focused on what we're potentially going to see. So this next article here is from Financial Post. Inflation tops a list of concerns for Canadian businesses in the third quarter. This is a particular survey. You won't be surprised. The Canadian Survey on Business Conditions, a quarterly poll of 17,000 businesses conducted by the Canadian Chamber of Commerce and Statistics Canada, found that 60% of respondents consider high inflation to be the biggest near-term challenge. You're hearing it in the news, you're hearing it from family and friends, you're hearing it at the workplace and obviously businesses. So guys, this is obviously a hot topic. This is what Bank of Canada is trying to control, and you're definitely going to continue to hear this until this is taken care of in terms of we're reaching back to 2 or 3%. I think the Bank of Canada will even take 3% at this point. Next article, guys, here is from the Canadian Press. Again, about inflation. Inflation is cooling, but the Bank of Canada isn't done its fight. And this is from economists. As I mentioned, you economists have a lot to say these days. So inflation in Canada is cooling. As I mentioned before, the slowdown was largely driven by gasoline prices falling. However, Canadians are still feeling a pinch at grocery stores, as I already shared with you. And here are just a few more pieces of information. We don't think this report suggests that the Bank of Canada is close to calling mission accomplished yet. That's based on the recent imprint for inflation. The Bank of Canada has been laser focused on bringing down inflation expectations, which were elevated in recent surveys. Important note, guys, here. When the public businesses start expecting inflation to go up or prices to go up, it's self-fulfilling prophecy. You're going to see obviously prices start to increase. And what the Bank of Canada is trying to do with raising interest rates is control and slow demand. They want to bring demand down. They want people to stop expecting, to pay higher for products. Obviously we are today, but that's their main objective with raising interest rates. They really want to slow down demand. Have they been successful so far? Yes, they have, but they really are going to continue because those numbers haven't been brought down, and they're trying to get it to 2%, 2 to 3, probably be ideal, and they would be happy with that. Same thing is happening in the US, pretty much across the globe. Inflation, interest rates are the hottest topic, along with currencies. What's happening with currencies? I won't get into that video, or I won't get into that in today's video. Last article here, guys. This is from Business Insider. US home prices could plunge 20% by next summer as housing recession kicks in, and this is from a top economist. The US housing market is in a recession. This is from Pathogen's Microeconomics. Ian Shepperson said. House prices are down about 5% since May and may slump another 20% by mid-2023, the economists had to say. Federal Reserve officials have indicated they want a correction in the housing market. The U.S. housing market is in a recession and home prices are poised to tumble another 20% by next summer, and this is from a top economist has warned. So guys, as you can see, we're definitely seeing house price correction in terms of sales and prices here in Canada. You're hearing the same thing in the US, and obviously I think the US's prices weren't elevated as much as Canada. So we'll definitely see what happens in the Canadian market. We'll definitely see what happens in the US market. And I'll continue to bring this information to you. And my next video is definitely going to be on the Canadian housing market in terms of sales and volume, particularly in the big markets. So guys, I hope you appreciated me coming at you. Any comments, likes, subscription will be much appreciated. It really helps with motivation and obviously making sure I'm bringing you the right information and is bringing you value. So I hope you appreciated me coming at you. Guys, have a great Thanksgiving long weekend. Stay safe, and we'll talk very soon. Thank you.